Welcome back, everyone. Welcome to another video. Today, we're going to talk about 7 most important concepts about finance, or you can say personal finance, that you absolutely need to know. The things I'm going to talk about today aren't just buzzwords, but they are very important concepts that can help you make better decisions, build wealth, and avoid those common financial mistakes. So let's get started. So first up, the time value of money. Let's say you have $1,000 today. So is it worth more today, or let's say 1 year after? Well, it's worth more today, right? So this principle states that a dollar today is worth more than the same dollar tomorrow because of its potential earning power. Let's say you have $1,000 today. If you invest it at 10% growth rate, it will grow to $1,100 by the end of the year. But if you wait until next year to get that $1,000, you miss out on that extra $100. This is true because of factors like inflation and the opportunity cost of not having or using that money that can work for you right now. So this concept of time value of money is very crucial for understanding investments, savings, loans, and all the other aspects of personal finance. So make sure you really understand this concept. And if you don't, you can revisit this video and rewatch it, but make sure you do understand the real concept behind time value of money. Next up is return on investment, or more commonly known as ROI. This is like measuring how well your money is working for you, or how much profit you made from an investment compared to what you initially spent. Let's say you invested $1,000 in a small business. After a year, that business gives you back $1,200. Your ROI would be 20%. Pretty good ROI, right? So ROI helps you to compare different investment opportunities. It's a term used in stock market, real estate, business opportunities, and anywhere there's a possibility of making money. Next, let's talk about leverage. Leverage is all about using borrowed money to amplify your returns. Think it of like using a lever to lift a heavy object. You're using a small amount of force to lift something big. In personal finance, you might borrow money to invest in something like real estate or stocks or any other asset. For example, when you're buying a house with a mortgage, you're essentially using leverage, meaning you're putting down, let's say 20 or 30 or maybe 10%, whatever that is, you're putting down that X amount of dollar and then you borrow the rest. If the investment goes up in value, you earn a larger profit than if you have used your own money. But be mindful, leverage involves risk. You can also increase your losses if things go south. Next is liquidity. It's all about how quickly you can turn something into cash. Cash in your wallet, super liquid. Your house, not so much. This concept is super important for both businesses as well as individuals. For example, a company needs to balance having enough cash to pay bills with investing in growth. And you might want to keep some of your savings in easily accessible accounts for emergencies. Liquidity is very important, especially if you need cash quickly. Let's say in an emergency, you need the money then and there. It's a very good idea to have liquid or cash, and not all cash tied up to an asset which takes time to sell and be liquid. Next, let's talk about cash flow. It's the ultimate lifeline for any business or any personal finance plans. It's simply the money coming in and going out. Think of it like water flowing through pipes. You need a steady stream, right? Positive cash flow means you're bringing in more than you're spending. Great for growth and stability. Negative cash flow, not so good, because it means you're spending more than you earn. Next, let's talk about net worth. Net worth is like your financial report card. It's what you own minus what you owe. Let's say you have a house worth $500,000 and $50,000 in savings, but you owe $200,000 on your mortgage and a car loan of $50,000. So your net worth would be $550,000 minus $250,000, which is $300,000, meaning your net worth would be $300,000. This gives you a very good snapshot of your overall financial health. You would always want to increase your net worth by acquiring as much as asset as possible and reducing your liabilities as much as possible. And finally is the behavioral finance. It's all about how psychology affects our financial decisions. There's a very good book called The Psychology of Money by Morgan Housel. I highly recommend this book. If you read this book, you'll actually understand what's the psychology behind money and financial decision and how we think about money. So I highly recommend this book. See, when it comes to money, we're not always very rational. It's a tough skill to learn. Separating your needs from your wants, tracking everyday expenses, budgeting properly, building an emergency fund, and investing for the future. Behavioral finance will teach us how we should think about money so that we stop wasting it. And there you have it, 7 very, very important personal finance concepts. I really hope this video was helpful. Please do share this video with someone you care about. Thanks for watching. I'll see you in the next one.